Namaste friends, welcome to GyanVeda English YouTube channel. This is for your information in the investment area. So today we have come up with a new video which is talking about the debt mutual funds. So we'll try to give you the overview of what are the debt mutual fund, the concepts and the associated factors. So let's try to understand how these let's try to understand what are the debt mutual funds. So these are the mutual funds who invest the customer or investors' money into some ways like government debentures, corporate bonds, securities, etc. So these are planned to give like a stable type of revenue or the returns for the investors. These funds are considered to be low risk, so they are not like the equity risks we are having. Next point is that these funds are best for short duration. So if you want to keep it for few days, few weeks, few months, or few years, the investors can choose to opt for the debt mutual fund. So there is an investment security aspect. If suppose someone don't want to lose the money if there is a downfall in the equity market, so these are the better alternatives to the in the mutual fund market. These debts mutual fund, they generate comparatively lower returns, but this is okay for people who don't want to take much risk as they return lower returns, so they are less volatile as well compared to the other type of mutual funds. Let's see what are the benefits of mutual funds, which are the type of debt. These debt mutual funds generate a stable returns over the long term. They have better liquidity option. Let's say you are in the emergency situation. If you go to your bank and break your FDs, they might charge some premature withdrawal charges. But in debt mutual funds, you will have the less charges for such things. Or sometimes you will not have to pay anything when you do a short-term withdrawal. You can plan for a systematic withdrawal. So let's say you have a pension type of fund where you have invested a lump sum in the debt mutual fund and you want to withdraw it over the long period of time, like monthly some fixed amount, you can opt to choose in these debt mutual funds. So for people who want to opt for less risky options, debt mutual funds are the ideal ways. Now let's see who are the people for which the debt mutual funds are designed for. These are the people with low risk capacity who don't want to take too much risk to earn more returns. People who may need these funds for their emergency needs or they have some planned purpose after a short duration, so they may choose to opt for the debt mutual fund. People who are waiting for correct time to invest in share market or the equity mutual funds. Initially, they can put their lump sum amount in the debt mutual funds, and when they see that okay market has little correction or downfall, they can use these funds to move from the debt mutual fund to the equity mutual fund, or they can directly invest in the stocks. People who want to distribute their investments in the equity funds over a certain time period. Let's say you have 1 lakh rupee now, you have invested in debt mutual fund, you want to distribute 5,000 every month for next 20 months. So you can move these funds from debt mutual fund to the equity mutual. What are the mutual fund types of debt? So there are liquid funds in market where you can invest for few days, few weeks to few months. There are some short, medium, long-term funds also where you can choose from few months to few years. There are dynamic bond funds which are having the dynamic maturity period based on the interest. If the interest rates are rising, you will have the lower maturity period, and if the interest rates are falling, you may have a higher maturity period. Next, the fixed maturity plans. These are similar to the fixed deposits in the bank. So you will have, but FMPs does not promise any fixed returns like bank. So if you have any questions for debt mutual fund or any other mutual funds, you can log these comments in the comment box below, and we'll try to address these questions. If you like this video, kindly share, subscribe and like this video. And disclaimer, we are not investment advisors. If you like to take any decision, kindly discuss with your financial advisor.